Let's look at the Asian stocks now. Remember, the Indian stock markets are closed, but rest of Asia is open. Let's quickly pull up the Asian charts and see, well, massive correction seen across most of the Asian benchmark indices, with the Hang Seng, Hong Kong's benchmark, correcting as much as 1.4% in trade this morning. Japan's Nikkei 225, which has seen a massive rally in the last 4 days, is trading flat this morning. Minor losses, second decimal points really. Meanwhile, another massive correction seen even in South Korea's Kospi, which is down more than 2% or so in trade. And China's Shanghai Composite Index also down about 0.6 percentage points. The only exception in the Asian pack this morning comes from Taiwan's TAIEX Index, which is up about 0.4 percentage point. Remember, Indian markets today are closed on account of Ram Navami, but they had a fantastic trading session yesterday, with the Sensex up more than 1,200 points. That's 1.6% up in trade yesterday, trading above that 75,270 odd levels. Nifty 50 also following suit, up about 400 points, trading at 23,300 odd levels, with the Nifty mid-cap and small-cap outperforming the benchmark indices, both up more than 2.3% or so. Volatility in the Indian stock markets remained high all of yesterday, closing the day at about 24.64 levels. Meanwhile, the maximum gains were seen from the banking and financial industry yesterday. BFSI stocks closed the day with very healthy gains. HDFC Bank recovering massively, up about 2.27%, and SBI up about almost 3% or so. Also positive momentum seen on consumer durable stocks, especially auto stocks, with Mahindra & Mahindra closing the day higher by about 3% or so. Maruti Suzuki up about 2%. Also, heavyweights including Bharti Airtel remained high, all in the trading session yesterday, up about 1.8%. Of course, the correction came by way of tech stocks, which continue to trade flat, and in some cases like TCS ending the day lower. And it's been a volatile year, all of 2026 from the 1st of Jan, and things got further exacerbated with the UN and Israel war on Iran. Stock markets have plunged massively, but history has got some lessons, and in the last 25 odd years, the Indian stock markets, like global markets, have seen massive downturns and then sharp recoveries. Let's look back at some of these events. Let's begin from the turn of the millennium. February 2000, in fact, is when the dot-com bust in Gulf stock markets across the world. India was not spared either. The Sensex and the Nifty had plunged as much as 40% between the years 2000 and 2001. The Ketan Parith K10 tech stocks, the IT stocks, were the worst hit. Remember, Nasdaq had been the worst hit during the dot-com bust, and that cast a very ugly shadow on the Indian stock market, especially IT stocks. Meanwhile, 8 years later, October 2008 is when the global financial crisis, popularly known as the subprime crisis or the Lehman Brothers fallout, hit both the global markets as well as Indian markets really hard. Sensex and Nifty were down about 60% in just 3 months. Indian banking stocks, infrastructure stocks, and real estate stocks had been the hardest hit. Cut back another 8 years when the demonetization decision was announced on the 8th of November 2016. The Indian market's extreme ultra short-term volatility was experienced, with the Sensex crashing back then as much as 1,700 points. Remember, Sensex was trading at much lower levels, but crashing 1,700 points then amounted to about a 6% crash on November 9th, the first trading session after demonetization came into effect. That time, this was the biggest single-day decline. But the very next day, on November 10th, you saw the banking stocks recover. And then came, of course, the COVID-19 lockdown, March 2020. Panic selling on the lockdown announcement when the Sensex and Nifty fell as much as 40%. Remember, the fall was witnessed right from about 25th of Jan or so, all the way till the 23rd of March and beyond. And remember, between those 3 months, the Sensex and the Nifty had fallen as much as 40%. And then what we saw was a V-shaped recovery, which eventually led to a 13% gain on the benchmark indices when the year ended. And then, of course, 2022, we had the Russia-Ukraine war. there was again short-term volatility, a massive FII exodus, especially from India's IT and auto stocks. What we saw later was global inflation as a result of high energy prices, and some large economies, including those of Germany, slipping into technical recession. And then this year hasn't been great either. In fact, quite the opposite. The US-Israel-Iran war has pushed oil prices much higher, and the closure of the Strait of Hormuz has created panic across global economies, fearing inflation and potentially global slowdown if this happens to be a prolonged war. Markets have remained volatile. But if history has anything to tell us, it's that every time there has been a massive correction in stock markets across the world, the bounce back has been even sharper. And every time after a downturn, there has been new record highs set by stock markets. We don't know how the story will pan out this year, but things aren't looking pretty so far as the declines that we're seeing in indices from the 1st of Jan are concerned. This year, Nifty has been down more than 10%. The Nifty oil and gas index has also been down about 10.5% ever since the 1st of Jan right through the 25th of March. Meanwhile, Nifty Auto, Nifty Bank also continuing to slide, showing overall bearish grip engulfing the Indian stock markets. Nifty IT has been the hardest hit. The Nifty IT is down about 20% or so of its value, with the small cap and the mid cap stocks also reflecting the broader erosion sentiment. At the heart of all this crisis are, of course, spiking oil prices, and we've seen oil prices since the start of the year have been at about 70% higher values in trade. Well, we've seen some step-up approach as far as oil prices are concerned, going up all the way from just levels of about 81 on March 5th, just 5 days after the war in Iran broke out, stepping up to levels of 87, 93, slight correction at 92, going up all the way to $106 a barrel on March 20th, finally correcting to as low as about $95 a barrel on March 25th, and then again a small spike seen at levels of about $98 a barrel on March 25th.